This podcast is sponsored by Tusk, a continuity of business solution for industries that struggle with traditional banking. Check them out on the web at tusk.network. The Rob McNealy program is the nexus of cryptocurrency, blockchain technology, and entrepreneurship. Now, welcome to the program. Today, we're talking to Derek Capo. He is the founder of TokenPay and eFIN Exchange. And we're going to learn a little bit about how he got into the crypto space. So, Derek, welcome to the show. How are you today?
Thanks for having me. Really good. Appreciate it. So let's see. First time I got exposed to, I guess, crypto or Bitcoin, I may have read about the white paper early when it came out, but I started seeing a lot of it or a lot more of it when I was in China around 2013 or so. I started seeing like Bitcoin signs around the neighborhood that I was living in. I lived in Beijing for about 8 years, from 2008 to 2016. Before that, I worked at a hedge fund. Then I did a study abroad business. So I studied Chinese for about a year, did a study abroad business, and then did a couple other ventures after that. So got me into Bitcoin, I think, was around 2016. I really said, I'm going to take this a little bit more seriously. I went to an MIT tech conference, and I was like a fintech conference, actually, and talking to the MBA students there, and they were like, yeah, this is real. This is really happening. We're taking more courses about it, and this isn't just some bullshit fad. This is something that's pretty legitimate and is changing. So I was like, okay. So I started really digging into it, and then yeah, so around 2016 is when I really started to dig in and really read and research. But before I do anything, I like to read a lot, research a lot. I think I remember seeing as many YouTube videos as possible as I could. I read so many different white papers, tried to understand what altcoin was. I didn't know what Satoshis were. All I knew was Bitcoin from 2013, stuff like that. So, but then, when 2016 rolled around, I was like, all right, this is now the rabbit hole. And it's very interesting because it resonated with me pretty quickly because I understood that whole concept of power and control of your own assets, mainly because my father came from communist Cuba. So he had everything taken away from him, and he had to move to Miami to have to start a new life with nothing, right? So Bitcoin was invented back then. They could have moved all their stuff pretty quickly, right? And and still have something, right? My wife is Chinese, and she went through communist era, right? So to me, it was just seeing all of that and seeing those stories and what happened, and kind of seeing the underlying concept of what was going on with Bitcoin, the financial system, control, and stuff like that. And it just kind of really resonated, and I understood it, I think, fairly quickly. Especially with my finance background, I understood what was kind of happening and how powerful it was. So yeah.
Well, it's kind of interesting that you bring up this concept of moving wealth across borders. And, out here in Utah, this whole concept of prepping is kind of a big deal, where people are preparing for the apocalypse or natural disasters and things like that. And one of the things that I've always said is that crypto, even among the skeptics, is that crypto has an advantage over things like physical gold and silver, that because if you were outside the United States, people in the United States don't understand what the real world looks like, but where you're in a war-torn environment, or you're fleeing as a refugee from a communist regime or things like that, having the ability to move your wealth, where let's just say you're taking a physical wealth, like gold, silver, jewelry, things like that. People that are refugees that are leaving those environments are often robbed of all that wealth. All that physical wealth is taken from them. And to me, this is one of the advantages. If for instance, just memorized your keys, right? Memorize your seed phrase, and then you could cross borders. There's no way people could confiscate that wealth. And that's a huge advantage, over, other, means of, store of values that are out there. So I think that's a really interesting take. And I don't hear many people come up with that take, except for the people that have some experience with actually fleeing.
Maybe people should look at Schindler's List and remind people that what would happen when all the Jews hid everything and stuff, and then the German soldiers were like, all right, take off all your clothes and leave it there, leave all your belongings, and not realizing they couldn't take anything, right? I think people have a short memory and they don't realize that it wasn't too long ago that we had horrible, horrible things happen to our world, right? And I think, I think that this is just people forgetting that bad things had happened. If you live in the States, I think you live in a bubble, right? Where people don't really understand what's going on. And then you start traveling to different parts of the world. I mean, we have an office in Romania, and I was there for about, let's say maybe 6 months or so, three to 4 months last year, actually, a couple months this year. And that's pretty recent. That's 1989. And, they went through communism and they got liberty in 89. So I think when you go to Eastern Europe and you see that, they understand the concept of Bitcoin very quickly. But when you go, more west to the US and stuff like that, it's kind of like, this is an investment, and Bitcoin's an investment, and we're just going to buy, we're going to hold, and people don't understand that whole concept of control and how, like you said, portability and stuff like that. And Miami people do, believe it or not, because they have a lot of Venezuelans that come in, and a lot of Cubans that come in, so they understand. In fact, their portability was setting up offshore entities to buy property in Miami. Even at the peak of the bubble, they were buying properties because it was better to buy a property in Miami at a 50 or 100% overvaluation than sticking to their undervalued currency, like the Venezuelan currency. So they'll take 100% hit versus a almost 10 million percent inflation rate. So it's very interesting.
Well, it's interesting with our crypto project is we're focusing, the first markets that we're focusing on are firearms related, and it's interesting the response to that, because it's a very political thing in the United States and around the world. But the response is interesting because, of all the industries we've looked at that have a recognized problem with, normal payment processing and banking and things like that, firearms are the only one in the country that are constitutionally protected. And it goes back to the whole Schindler's List kind of thing, right? It's like, one of the things the Nazis did, took away firearms ownership, right? That's typical. They did that in Cuba as well.
China has no firearms.
China, everywhere, right? And Mao said power comes from the barrel of a gun, right? But it's interesting, like when I talk to people about our project, and I'm not here pitching my project, but it's interesting, the take from Americans and Western Europeans is very anti-gun a lot of times. But the Asians, surprisingly to me, and the Eastern Europeans are all about it. And it's just interesting with the perspectives between Eastern and Western Europeans and the Asians. And the Asians, for the most part, can't have anything, but they have a huge like paintball and airsoft communities in Korea and Japan and Hong Kong. But they know so much, and on top of the video game side of things, but they know so much about firearms, but they're not even allowed to have them. And they're culturally very American in how they respect and view firearms as a defensive tool and things like that. And yet obviously the Eastern Europeans who have gone through and lived under occupation, and now I'm 47, so the wall went down when I was in high school, so it was a very vivid memory for me growing up in the Cold War. But it's interesting seeing the people that grew up under occupation by the Soviets versus the people that in Western Europe who didn't, how they view the ability for people to defend themselves. It's kind of interesting. It's just, I think it is a bubble. And I hope it doesn't have to change in a way that, people have to suffer first to realize the importance of the ability to change themselves or defend themselves.
Interesting because you say that about guns, because I guess when I was younger, it's not that I was I guess pro-gun is not the right word. I understood them, but I was just too afraid to have them in my house, just out of fear of an accident or somebody dying, right? Because you've heard all the stories. And I've shot a couple guns when I was younger, and then I moved to China, and I was actually kind of happy that there was no guns, because I felt safe walking down the street, and I could have my female friends walk down the street at 2 or 3 in the morning and not be mugged or not be shot or killed. You never heard of that. And it's so funny because I think over time I kind of like said, yeah, I think a society could live without guns. And then I think you start to see things, and you start to see the protests in Hong Kong, or you start to see other stuff where you see governments controlling and doing stuff, and you're like, oh, that's kind of why you've had this, empowerment of guns, right? And I think, again, it's kind of our short memories is governments are doing this, and they're making it seem like it's a good thing. And in short term, maybe it is a nice thing that you can live in a safe society. But when somehow the government turns and starts doing things, and it's not only, I mean, it could be just one person, not like 100 people in the government, let's be clear, start to do these crazy things or negative things, then all of a sudden you look around, you're like, well, how do I fight?
You
And
don't.
they can't fight. So
And that's why as much as I'm sympathetic to what's happening in Hong Kong, I don't think they have a chance. And I've studied a lot of rebellions. I read a lot of history, and it's interesting how many legitimate positive revolutions didn't work because they didn't have access to guns. You can look in Ireland, for instance, in the 1900s. You know, their initial revolution kind of failed, or was really difficult because they didn't have guns and they didn't have access to guns, and they were an island. Well, very much like Hong Kong, right? How are you going to get the guns there? And without the ability to use force to meet force, you don't have an advantage. You're not going to be successful. Tiananmen Square is a great example of that. You're not going to stop tanks. And as soon as they shut the cameras off, that's when they massacred thousands of people there. But I mean, even in China,
the rumor was millions.
well,
it's crazy. It's crazy.
we don't know, but we don't know. That was pre-internet, right?
You ask the locals and they're like, it's a lot more. It's, you know, it's crazy.
Yeah.
I've talked to people. I have an American that was there during that time, and he was like, I don't know, but it wasn't that day. It was the many months after that.
Well, they arrested everybody. They rounded people up. I mean, and it's quiet, and there's no transparency, so you don't know. But even in China, right? Like they had that guy a couple of years ago use a sword and go kill and stab like 80 people or whatever it was, and then, you know, and then you got people that in France are driving trucks into crowds of people. I mean, if people want to do bad things, they're going to do it. They'll just find substitute methods that could, you know. And I think the thing is, if you want to stop a guy with a sword from chopping you up, you don't want to try to stop them with your hands. It'd be better off if you had some, you know, means of defense. Same thing with a truck. How are you going to stop a truck? You shoot the driver. You know, I mean, it's like, you know, guns are a tool, just like the blockchain's a tool, right? I mean, crypto is a tool, and tools can be used for good purposes or bad. But the thing is, I don't think you can take people's rights away because of the acts of a criminal or an insane person. You don't punish people and take away their rights because someone else abused theirs. And I think that's where we're getting off track. But I mean, really in this country, we're also in the point where people don't even want to have free speech anymore, which is ridiculous. You know, if you offend me, you should, you know, be in jail now. And it's like, it's, I don't know, we're going off the rails. So anyways, like man, we could have a whole show just about this, and we probably should.
I think what we're trying to establish here is that we both come from very different worlds. I think we both have learned from our experiences, but I think when you start to piece everything together, we're all kind of joining this whole Bitcoin and crypto kind of, you know, revolution, and it's all kind of with very similar fundamental things. And everybody could have 50,000 angles about how they're going to do it, but they're all kind of following at the end of the day the same action, right? Which is whether they're purchasing crypto or they're buying Bitcoin, and they're kind of and they're all doing the same thing, 50 different thousand ways of doing it. And I think that's fascinating. But there are a couple themes that are very common that I'm hearing. And I think, but it's very, it's at the end of the day, it's very interesting and how it all comes together. So,
well, I mean, freedom of speech, I think, is vital. And I think freedom to defend yourself is important. And I also think the freedom to transact is important. And I mean, these are all, in my mind, I think, if you think about it, I think, you know, how you buy things is a right too, right? That's a freedom of speech. Like if I want to buy, you know, if I want to support a candidate, for instance, but being able to do it anonymously because I believe that's freedom of expression. You know, if I want to buy something in private, or if I want to buy something and not have the value of that stolen, you know, that's my right. And I think that's where I think crypto kind of unites a lot of this stuff. But tell me a little bit about, so you got two different, or at least two different things you're working on between TokenPay and your access. Let's talk about TokenPay. Tell me what TokenPay is.
So TokenPay is got a few different things. I guess when we started this whole vision, it was, you know, we had the TPay, which is the actual coin, privacy-based coin, but also has a public ledger, so you can do both for commerce. But you can also send somebody stealth transactions, meaning I can send you $100 worth of TPay without anybody really in the world knowing. That is no different than me paying you $100 or you paying me $100 for, say, painting a room or something like that, right? There is no difference. It's just a digital form of that. It doesn't mean it's nefarious. It just means that if somebody wants to protect and how much their assets they have, and because the thing is, I think what a lot of people don't understand is anytime you use a lot of other coins or services or wallets, you're exposing your IP address. If you're exposing your IP address, you're pretty much broadcasting where you have all your assets. It's kind of like saying, this is my bank account, this is where all my money is, or that's the bank with all my money. It's not the bank over there that you think it is, it's that one.
Right.
I think that's it. So TokenPay itself is an entity. It's got a few different branches, but the main one is this investment entity that we set up. It's kind of like a foundation, but not really. Where this one, TokenPay Swiss AG, owns a stake in a bank. That bank in Germany is to basically make it easier for crypto companies and people to start using crypto on a daily basis without being judged. I think what the whole thought process was in 2016, 2017 was if you did anything in crypto, bank accounts, specifically in Europe, in Asia, and to some extent the US, if they found out that you did any crypto transactions or too many crypto transactions, they would just shut down your account. So the whole story is that, we have this bank, TokenPay Swiss AG has this bank to basically cater to a specific clientele, right? And it's kind of basically changing the DNA so that they can communicate better, right? I guess because a bank that understands crypto can talk to crypto customers better, right? It's not like a regular traditional bank that's only sells mortgages and tries to, sign up for a checking account and says, no, I only do crypto. It's like they're just talking different languages. So we have that. And what we've also built as well is a decentralized exchange, a non-custodial exchange called eFIN. We also have a merchant services portal with the TokenPay brand that allows businesses to accept crypto. That's still in beta, but basically, and we're putting a couple plugins in right now, like a WordPress plugin. So people, small businesses all over the world can just start accepting crypto. Eventually
Nice.
we'll have it so that you can convert the crypto to other crypto or convert the crypto to fiat all through the bank system that's being implemented. I think the difference is a lot of companies basically will, how do I say this? They use partners, and when they use partners, sometimes those partnerships are not very strong and they could be gone tomorrow. So I'll give you an example. A couple years ago, Wavecrest was like one of the largest debit card providers for crypto, like a crypto debit card. Wavecrest was one of the first. Then a ton of them came out. We also said that we would come out with a debit card. And then we looked at Wavecrest and they were private labeling all of this stuff. And we saw that as kind of like a stopgap solution. And then we looked at the terms of the deal. We also started talking to, then we talked to the CEO, the former CEO of the company, because one day Visa or MasterCard, I'm trying to remember who it was, pulled the plug on the entire operation.
Wow.
Just like that. So you had like 7 companies, some of them were our competitors. They're all doing this debit card thing. And then all of a sudden they pulled the plug and no more debit cards. That's it, it's over, done. And we were like, oh, that's pretty crappy. And there's a few of them now actually that are all using the same infrastructure again. And I don't know if maybe Visa, MasterCard changed some terms or deals or whatever, but the thought process was that Visa, MasterCard will never do anything with crypto. Even as of today, they still haven't acknowledged that they will do anything. They will never allow their network to touch crypto. So all these debit cards that you see in the market are actually just debit cards. All you're doing is getting your crypto, converting it into cash, and you're spending it using your regular cash. But instead of paying, it's no different than me sending, $1,000 to Coinbase, converting it to cash, depositing in my checking account, and then using my debit card from my checking account and spending it. It's like same thing. It's like I'm spending my crypto.
It's just abstraction kind of thing.
Yes, it's a branding, labeling, all that crap. And we started seeing more and more the more we got involved in the details. And in reality, people don't realize they're actually adding two middlemen now instead of just one or two like before. So the cleanest is actually to use a service like Coinbase, send them the crypto, sell it, and you pay the 1.5% fee or whatever it is, and you deposit in your bank, and that's it. You just spend from your debit card. If you use a crypto debit card solution like some of our competitors, you have to deposit money into this thing, which now they have control over, and they can use it to do a bunch of stuff, which they use it for margin and lending out. There's a middleman that also charges a fee. Then there's a middleman as well, Visa, MasterCard, which you're still paying with the other one. But there's like 3 or 4 middlemen that you never had to deal with, and now you have to deal with. So people don't realize they're actually paying more for something that they technically had, but like through a hack, I guess you can call it. So anyway, I think what's interesting is you have all of these services that we're building out, and what we're doing is building this really, really large ecosystem where we're not dependent on very strong partners. We have the equity stakes in a lot of these different businesses. So it's really hard for them to just kind of like abandon us. Yeah, they can't. It's very hard unless we do something really silly or something, or they did something silly and they had to walk away from just something, right? But it would be really hard because it's like, if you're part owner and you're like, well, but we talk often like what's going on, what's the strategy, how do we be safe, what's the regulation, and with regulation it's very hard because you don't really know. The regulation will be good for like a couple months, and then you have to revisit it every 3 to 6 months because it changes. And I think the hotter crypto gets, the more the regulators come in actually. So it's kind of a hard business to be in, to be honest.
Oh, trust me, 2 years into this as a project, yeah, the regulations have been kind of funny, and I can only say that I'm glad that I'm really paranoid because the way we launched, we didn't do an ICO with our project, and and we looked really closely because almost 2 years ago, people were really pitching, attorneys were pitching this utility token concept, right?
Mm-hmm.
And I think some people should be disbarred for that, to be honest. But we were told, yeah, you could just be a utility token for what we were doing originally. And I'm like, I don't think so, because I spent, it didn't take me long to kind of take a deep dive into securities and realize that even 2 years ago that ICOs were likely illegal securities under U.S. law, and that's why we didn't do a token sale. We never sold tokens or hyped or anything like that when we launched. And it's interesting now seeing that we were at least smart, because in looking now where things are going, I think it's going to be interesting how the exchanges work with the American market. So running an exchange, you started. So this is a DEX. eFIN is a DEX.
Yeah, it's a non-custodial DEX. Yeah.
So are you up and running already, or is it still in beta?
No, it's okay. So it's running already. So eFIN is really a multi-currency wallet. So you can just use it just as a wallet, but it's also have a trading platform. So if you want to trade a few of the coins that we have on there, you can. It also allows you to do a couple of other things as well. But yes, it is running. We put a beta label on it just because we wanted to get a decent amount of volume and see if there's any issues or anything like that before we decide to kind of go a little bit more mainstream. All of our products and services are actually not available to Americans, only because we still don't know officially what the regulation is for some of these things. I mean, even some of the businesses like Coinbase bought a brokerage firm about a year or so ago, out of concern that they would need to get a license, but they don't technically need it because it's still kind of gray, but they've been doing stuff to kind of like appease the regulators.
Right.
So, or kind of prepare, like if the regulators come, well, do we have what we need? And it's just extremely hard for any business that's small to try to do anything, because they can really come in really fast and really hard and just destroy it. And the intent is not bad, right? It's just, are you doing what you need to? Like, we've been talking to a lot of people and they're like, well, you need a you may need a money service business license in every state. It's like, okay, great. How much is that going to cost? Oh, a couple $1,000,000.
A couple $1,000,000. I was about to say a couple $1,000,000 to do that.
For every state, some states you get, and you can get a few states. Some state you have to just get one.
And some states it's impossible. Like Utah, for instance, doesn't believe they won't issue money services licenses to crypto because they don't believe, the state of Utah doesn't believe that crypto is money. Right. So they won't actually regulate it here. They won't give you an MSB here, which is interesting. Going forward, it's like I've been, as a project, right? I've been trying to predict. You got to try to, as an entrepreneur, you got to try to predict where you think the regulations are going to go and try to mitigate that. Regulatory risk is a huge thing, and I think a lot of people don't think about it enough. But what do you think is going to happen in the crypto space, like for exchanges in the United States? What do you think is going to happen over the next year, 18 months in that space?
I'm extremely cynical only because of my hedge fund background of being naturally cynical. And I've seen how Wall Street and corporate America really works. I do think that they will create regulations. They will make it difficult and expensive for new companies to begin, but they will make it, easy for some of the bigger companies to establish it. So like if they open it up, every brokerage firm in America will start trading crypto, which means that it'll be impossible for a small business to do it or to start. I think they definitely have to tone down the whole criminalization aspect of it, because I think that's pretty insane. But I do think it's going to be a slow process. I do think it's going to happen in the sense of they're going to start legalizing certain things and making it a little more clear. But I do believe that the people who are making these laws are the same people who are going to be running these businesses eventually in some way, shape, or form. Meaning they're either setting the regulations and they quit the regulators and then they join these companies and form these companies later. I've seen it time and time again. I'll give you an example. I'll give you an example of the biggest fraud one of the biggest frauds I've ever seen in corporate America, apart from WorldCon, Enron, and I don't know if you remember those.
I was in business school in my MBA program during that. We actually studied those as like case studies of what not to do, right?
What not to do, and it was very clear cut. When you read the financial statements, you knew something was off. But the biggest one that I saw, that I felt after studying it for about 2 weeks working at the hedge fund, about a week or so at the hedge fund, was the breakup of AT&T. Nobody really talks about this. In the 1970s, AT&T was labeled as a monopoly that had to break down, I think, into 12 companies or
the Ma Bells.
Yeah, it was the Baby Bells. It was the Ma Bell and the Baby Bells, and it was a Southern Bell, Northern Bell, whatever it was. And how many telecoms do we have right now? Again, we're back to 3, right? So what happens at the end of the day? They broke up. All these companies were formed. The bankers now had 15 customers instead of 1. So they allowed all these bankers, all these lawyers now had more clients. Instead of one firm working with one company, now they had 15 or whatever. And at the end of the day, telecom companies went bust. Telecom companies merged. Telecom companies got bought out. And the only ones that were able to succeed were maybe 4 or 5 who had very smart managers. And then all the other ones, they lost a lot of investors a lot of money for many, many, many years. But now they're all back together and there's only 2 or 3 left again. And nobody's calling them a monopoly. And I think it's very funny because at the end of the day, the people who won was Wall Street. Wall Street won because they were able to make money in all the trades, in and out, right? Instead of having one company to trade stocks from, now they had 15 companies to trade. They had 15 products to sell each one. They all, Wall Street had the ability to sell bonds and sell stock and do secondaries, and they made a lot of money from all of this. And I always feel like when I saw that story and I analyzed it, I just felt like, okay, this is how the real world really works. It's unfortunate. The retail investor really has no chance whatsoever, or very little chance. And then when you started to see what happened with Dodd-Frank in 2001, where basically nobody was able to invest in IPOs and, darling IPOs from the late 1980s and 1990s, all the real money was made from 2001 to 2015 from private companies. That eliminated a lot of people to want to become public. because you would be able to get private valuations better than public valuations.
Well, it's Sarbanes-Oxley, you know,
Yeah.
SOX
Sorry,
compliance was
Sarbanes-Oxley.
$1
Yeah, I
million
said Dodd-Frank,
a
yeah.
year.
Yeah,
you know.
yeah. That's what it was. Sarbanes-Oxley. I'm so sorry. Dodd-Frank was another one. And when that happened, it was like you realize that the game is pretty rigged. It's rigged to really make really, really rich people who are in the industry richer. And you really, as somebody that's saving, you know, $500 a month, whatever it is, to buy stocks or whatever, you really are against somebody's going to take your money, right? And unfortunately, it's not some crazy trader that's smarter than you. It's just the way the game has been designed. And I think when you see that, you kind of get discouraged about what the regulators are going to do about crypto. When in reality, the fundamentals of crypto are, we don't need you. We don't need a government.
Well,
we don't need this, you know.
It's way more transparent.
Yeah, it's totally transparent.
Yeah, and I think this is obviously, there's been people that have taken advantage of the people that want to get rich quick, right? And so people are always susceptible to, you know, pitches like that.
Yeah.
But I think this is what I think, that going forward, I see that I think all the American exchanges or exchanges that deal with Americans are going to have to delist all the ICO tokens, because most of them are illegal securities. Most of them are dead projects anyway. But and I'm going to bet that privacy coins will have to be delisted as well. I see this is kind of what I'm thinking is going to happen over the next 12, 18 months in the United States. Just because where the regulations are going to go. What I think it's, you know, I think it's also going to put the United States, the U.S. behind in this space, because other countries.
United States has been behind in technology for the past 5 years. China has this, and I lived there. I saw the transformation of China going from a full out everybody pays in cash to everybody pays with a debit card to everybody pays with WeChat. And right. I'm not saying that's a great thing, because obviously WeChat is now controlled by the government and they monitor everything. But when it comes to tech, convenience, speed, and stuff that's happening, China is blowing everybody out of the water. Everybody out of the water. So,
but I think the thing with China is that the government sees these tools as abilities to control and use them as surveillance tools, whereas
every government sees it.
Yeah, and the United States, on the other hand, because of the weird relationship between corporations and government politicians and things like that, is that they want to just try to lock people out and protect companies from technological innovation. So I think both suck, to be honest.
Yeah.
You know what I'm saying?
Pick your poison, right?
You know, in the U.S., this is what my take is. When corporations really fear crypto, because I don't think the U.S. corporations really fear crypto yet. I think it's starting to get on the horizon and their radar now. I don't think they fear it yet, because when they really fear crypto, hell is going to be unleashed in the crypto space in the United States when that happens. Yeah. And so I think that's why I talked to a lot of projects and stuff out there, and I think, you know, there's a lot of, I think the people that understand government and politics they're concerned about that. What does that actually look like going forward? Is that when you start?
Yeah, I don't know about the delisting. I'm thinking about your idea of what's going to happen in 12 to 18 months. I don't think they're going to delist some of the ICOs, because they'll just pay fines, and they have already. And right. And so there's money solves that problem. That's how Wells Fargo got away with it, with stealing from people, and they paid a fine, and that's it, because they don't have the power to, you know, put somebody in jail. Other divisions do, but that's a different story. So they'll fine them. They'll give them an opportunity to make money, but at the end of the day, I do see if it's structured correctly, I do see a lot of businesses consider or foregoing the traditional IPO method and going through a STO method and going through that, because the number of public companies has decreased, I think, more than 50% since 2000. And there is not that many new companies that are becoming public. They don't want to become public. They don't like being public.
It's too expensive. It's just too expensive.
So I think that there is a demand, but I think it's now global. I think now people will be able to invest in a small project located in India that is legitimate, has a good team, and maybe has 5 million in revenues. And that's okay. They can now. And I think that that's not bad. I think that's a great opportunity that other people that we have never been able to have, you know? So.
And I think it makes sense. I mean, to me, STOs make a lot of sense. It takes a lot of friction out of the system, and it's the regulation is going to be the problem. And I think, you know, there'll be mechanisms to come in to do diligence. Like, you know, white papers are not enough diligence to do. You can't do your diligence on a project based on a white paper. You know, angel investors they do background checks, they do, you know, credit checks, they want to see what's your go-to-market plan. They want to see things like your management strategy and things like that. White papers aren't enough diligence, but I think, you know, for the STOs, there's going to have to be business plans and diligence mechanisms. And I think there is a way that we can do that on decentralized projects going forward. And I look forward to that. The question is the American government going to allow it? You know, you still get into, you know, are they going to change, 10 decades of, SEC or 9 decades of SEC law? How's that going to be overturned? And my bigger concern about adoption going forward, and I don't think anybody's complaining about this yet, is the IRS rules. I think, in fact, IRS rules are impeding adoption more than the SEC is. You know, from the actual user perspective and the user side of things, not from the investment side of things. And you don't hear anybody complain about it, but I mean, I've been a retailer, I owned a retail store, and the way the IRS treats it, crypto, I think the rules don't work because crypto is not property. It's kind of currency, but it's kind of can be both. And I think that somebody, and I was hoping that Libra, because of their lobbying resources, would have been the ones to change the IRS rules and lobby to get those changed and maybe have crypto treated as a foreign currency rather than property, because the accounting around using crypto as a retailer is insane. And you know, having to maintain all your, you know, basis points and things like that for every transaction, it's insane. And to me, because I don't believe people are really using crypto for buying and selling things yet, not in any really mass way. And when retailers start seeing all the accounting overhead that they need to deal with and account for that, I think that's going to be a big impediment to adoption. So I would like to see the IRS rules changed on this, but I don't see anybody putting the actual lobbying resources into that side of it. Have you ever seen anything along that line?
No, I think the clear-cut decision from the IRS is that Bitcoin is property. That's it. It's an asset. For them to officially declare it a currency, I think they would need to see more data or more proof that the actual liquidity of Bitcoin is treated or used like a currency, and it's not fake wash trading volume and manipulation or anything like that. Remember, when a currency is manipulated, a government manipulates it, or traders. But so there's two different groups that really manipulate it. But Bitcoin is manipulated by many, many, many different people. I mean, you can get a few thousand Bitcoin and drop the price a few percent, right? Which could actually, that could be pretty disastrous for all the derivatives and BitMEXs of the world that have trades the opposite direction. So I think I haven't seen anything from the IRS in regards to that. All I've seen is the stuff that they've publicly said. I don't see any lobbying, but I think that there's no reason to do any lobbying first until we start to see a little bit more clarity about how the corporate structures and the exchanges are going to be regulated. Because once that happens, then the money comes in, and then they have an incentive to change the laws on the IRS side.
So I mean, you just brought up an interesting point about fake volumes on exchanges, and you guys have a DEX. How are you guys dealing with that, and how do you see the wash trading and all that fake volume, affecting the industry right now?
I'll give you a very clear example. We see projects that are top 100 on CoinMarketCap, and you click on them. Some of them don't even have a great website, don't have any social media presence. Then you look at the list of exchanges, and they're like no-name exchanges that you've never heard. And then you see like $1 million traded on them. And then you're like, all right, and then you click on it, you click on the website, the Alexa rankings or whatever, there's barely any traffic, it's bot traffic, whatever it is, and you say to yourself, how is this good? Somebody will actually believe that this is a pretty good project and it's top 100, and somebody in the world may put $1,000, $100, $500 and actually believe that, with given greed and hope or whatever it is, that this ranked 100, 100 ranked product is going to go to 50, and they're going to make 20 times their money because they read a blog somewhere. And it's hurting the industry because there's a lot of projects that are bad, that are manipulating their rankings via exchanges that are really, really bad, that are fake or false or not even that good, where the coins themselves control a very large amount of the supply. So what they call tokenomics.
Right.
And what they do is they sell a certain percentage of them very, very, very slowly over a very long period of time. And they use that as a mechanism. In fact, Ripple is one of them that's kind of guilty of that. Nobody wants to talk about it. But the reality is Ripple has been a top 5 coin because they've been able to control their supply for a very, very, very long time. Of course, given their growth and popularity and the fact that they've been able to
fake it till they make it.
They have faked it for a while. Then their coin got so large in valuation that they were able to sell their coin very methodically. Even Brad Garlinghouse admitted how much it was. Even now it's 0.3% of the daily traded volume of the real volume, or something like that, is what they actually sell every day. 0.3% of the actual real trading volume every day is what they slowly sell in the market, with an option to every month to decide whether they sell part of their 1 out of 55 months of coins that are locked up. So they owned at one point 90-something%. They've slowly sold off a piece of it. They go to exchanges like Binance and they'll say, hey, we've got 100 million XRP to sell. The price right now is 29 cents or whatever, 50 cents. We'll give it to you at 35 or 40. Just sell it, keep your margin, and that's it. Just give me the money up front. We don't want to deal with the selling kind of thing. And they did that for very long. So then they got that money, and then with that money, they've been able to do build a business. They were able to build products and services that actually work with their thing. So yes, I want to say they faked it till they make it. I think they just used a very interesting strategy. It's worked. It's worked for them. It's worked for a lot of others as well. There's so many of these projects that this. So it's just sad because I think people believe that the valuation of them is because it was driven by the success of the business or the success of their endeavors.
Right.
That they are doing something that's really helping, and in reality is some of it is and some of it isn't. You really have to go down and dig deep. Do I think that Ripple is providing a service? Yes. Do I believe that they've bought in with their partners and stuff to be able to use that service? Yes. I mean, it's kind of like imagine you had a product and you said to a company, listen, I'll give you $1,000 if you try my product. And the company's like, all right, fine, whatever, I'll try it. 3 months, 6 months, give me the $1,000 now. If I don't like it, I can walk away in 6 months. Yes, you can walk away in 6 months. Don't worry about it. It's not. They start to use it. It's okay. It's not that bad. Can we reduce our costs? Yeah, we can here and there. It's good marketing for us. Does it say that we're in blockchain now? Can we say that we're in blockchain now for our investors? Because they're public companies. Yeah, you can now say that you're in blockchain. Okay, maybe it's not so bad after all. And then some of those companies may see a real good value of their product. Some of them, no, they don't see any value, and they just kind of, okay, great, it was great working with you for 6 months. Maybe we'll use 1 product, not 3 or whatever it is, and go from there. So I think the more you see that, it's interesting. Now with the DEX, all of the volume on the DEX is real. There's no wash trading. And the reason why there's no wash trading on a DEX is because it's too expensive and too slow to do it. In a centralized exchange, all the numbers and all the trades that you see can be deleted, reversed, canceled, whatever it is that you want to say. They're technically just numbers that are there on a database, and that database can be corrupted, destroyed, deleted, manipulated in any shape or form. Whereas with the DEX, every single transaction that occurs on the DEX is peer-to-peer, and it's on the blockchain. So a wash trading, you cannot do wash trading on the DEX. It would be absolutely silly. Can you do market making? Yeah, legitimate market making, where you have 4 orders on the buy, 4 orders on the sell, and some spread in between, and then make profit or margin from there. But that is the difference between a DEX and a centralized exchange, and how that differentiates and stuff like that. So it's a good long reply to your question.
It very much is. So we're actually running out of time here. So where would you say that you guys are going to be as a project in the next 6-12 months? What's on your horizon? What should people know about what you're working on?
I think the main thing is just building out our products and then helping out all of the partners in the ecosystem with the bank. So the bank's been able to bring in new people into the ecosystem, and the goal is to help them out with anything. Like they have a business that has POS terminals and ATMs, and other business that does like online web stuff. So it's helping them, but also growing out and building out eFIN, and then eventually growing out the merchant services. We also have an updated blockchain. So it's a little bit safer, more secure than what we have right now. Just given technological upgrades, it's very, very normal for you to upgrade blockchains and fix things, right? So yeah, I mean, for now, we just keep on plugging away, doing stuff, because you kind of should. You need to, especially in this space, regardless of whether it's a bear market or not. It's important to keep pushing. Sooner or later, somebody will see the value and they'll say, hey, this actually makes sense. Like, the whole concept of a DEX for us was that it's provided value to people in the sense that we have people given a choice that they can do something without losing their assets. We were victims of a centralized hack of an exchange with Cryptopia. We had many people who own TPay, have their TPay on Cryptopia. In fact, more than 1 million TPays on Cryptopia, which is about 4% of our supply.
Wow.
So actually 5% of our circulating supply, 4% of our total supply. So it's pretty big impact, actually, very big impact. So we saw that was a really horrible thing that happened. And I think that there's ways to have non-custodial. I do think that people who are in this space, who are really in this space, they really like the whole non-custodial aspect of it. So we're building that out, and we're adding more coins and doing a bunch of other stuff to attract new people. So.
Well, I'm looking forward to seeing what you got going. Where can people find out more, Derek?
Yeah, they can go to TokenPay.com, or they can go to eFIN.com, or they can also check our Twitter at TokenPay or at eFIN Exchange as well.
Thank you so much for coming on the show today.
Awesome. Thanks a lot for having me. Appreciate it.
Thank you for listening to the Rob McNealy program. Make sure you check us out on the web at robmcnealy.com and subscribe to our podcast at YouTube, iTunes, and on the Google Play Store.